Hi, it's Eric Nuttall of the Ninepoint Energy Strategies with this weekly update. We're fresh from a quick trip to Calgary, there for a day and a half attending the Peters & Co conference. It's always a really good use of time. It was 14, 15 degrees while we were there. That's Celsius for our U.S. Viewers. Not cooperative for the natural gas price, but optimism in the air. We met with a number of our key holdings, both in oil and natural gas. I think some of the key takeaways from the oil perspective, it was just a reiteration of just how valuable many of these companies are and will be in a world where you've got peak non-OPEC production, you've got challenges in U.S. shale. This week, the EIA came out and forecasted a permanent decline in U.S. shale production going forward. So kind of reiterating the thesis of the twilight of shale, the loss of that marginal barrel over the past 15 years. U.S. shale has been 117% of total non-OPEC supply growth. We think shale companies have an inventory challenge. They'll have to replace them, et cetera. And so it just reiterated the strategic long-term value of those barrels in a world where we think demand will grow for many decades to come. We also did our talk last week focused on the panic and the opportunity that we saw in the freakout over Venezuela. And Donald Trump, of course, promising that, there will be a surge of production. U.S. companies will trip over themselves to scramble to get back into a country where, they've had their assets expropriated from them several times over, and lack of infrastructure and pipe and all these different challenges, which we talked about. We've since that time, just in the past week, seen a very strong recovery in oil companies, especially Canadian oil companies. We did take advantage of that panic and fear early last week. We topped up and added to key positions of whom we got to see this week. Just reiterating, one of our names, it's a mid-cap Canadian oil sand company, debt-free. They're not just buying back stock, but while doing so, growing their organic volumes at one project now. We think sanctioning another project later this year, early next year. And it's amazing. You look at these companies, in contrast to U.S. shale companies with, 3, 4, 5 years of stay flat inventory, they're meaningfully growing their production in both of these key projects. Once they reach full nameplate capacity, my question to them was, well, how many years of, stay flat inventory do you have? Their answer was 40. This is a company where we think we could see $70 oil by the end of this year, and that's kind of our base case for 2027 and beyond. This company can buy back almost half of their shares outstanding for the next 5 years at 70. So, you got 40 years to stay flat. You can retire half of your stock over the next 5 years. It shows you just how dramatic the compounding impact of share buybacks are going to be. On the political perspective, I would say, generally speaking, there was not a lot of confidence that despite the improvement in communication languages from the Prime Minister and the Liberal government, there's not a lot of optimism around meaningful action being taken. We've seen a lot of talk, very little action on the part of getting anything built at light speed or whatever the term was. So I think a lot of companies are just preparing themselves for a world where we don't have a lot of egress, incremental egress, or at least a new million barrel per day pipeline. There are expansions underway both this year and next, increasing Canadian capacity by as much as 800,000 barrels per day. That's going to get us through to about 2031, 2032, but we do have a challenge ahead. On natural gas, very clearly weather has not been cooperating. We left Calgary, it was 14, 15. We come back to Toronto in a snowstorm now. It's minus 12. So the market's completely given up on winter, which is obviously a key part of the natural gas thesis. We always just hope for, model, and pray for normal weather. The bullish drivers for us is LNG. And so with the sell-off that we've seen in the natural gas strip down to about $3.15 now, in our mind, that's well below the necessary price to drive required volume growth. And why do we need more natural gas production? It's because LNG demand in the United States is going to grow by 3 BCF per day this year. In Canada, Train 2 of LNG Canada should be up and running very, very soon. They've had some issues short term. That will drive a BCF a day of demand growth eventually. So you've got this meaningful increase in demand growth. You notice I didn't talk about AI and data centers and whatnot. That's just additive to the bullish thesis. So we're not going to get the necessary supply volume growth at a 315 strip. We continue to think that $4 is that marginal cost of supply. You don't have it yet. And so we would expect, given the demonstrated discipline from U.S. Natural gas companies, we will not see the necessary volume growth now. And so the lower we stay now, the more bullish it sets the market up for later this year. And so we have not given up on the natural gas trade. It's in fact where we see the best opportunities today. For oil, there's too much political volatility surrounding Venezuela. Iran is obviously front page headlines. Will Trump strike them? Will they not? Will the ongoing protests lead to regime change? The nearest term risk to oil is to the upside if protesters, demonstrators, citizens realize that a strike is a potential means to an end for them. And so that could impact oil production pretty meaningfully. But for now, we remain bullish on oil in the second half of this year because of the peak of non-OPEC supply, ongoing demand growth, and the rationalization of OPEC spare capacity. For natural gas, with strip at 315, marginal cost of supply at 4, we use that as our floor price. We're being proven wrong in the short term. But at $4, given the sell-off we've seen in natural gas stocks, you can buy the best of the best, biggest of the biggest U.S. names at now 13%, 14% free cash flow yields. And that's, $5 perhaps is off the table for now. Winter's not over, but just using our base case of 4, we see very meaningful upside in U.S. natural gas stocks. And so with that, we will say goodbye. We're off to shovel with our kids in the lane. It's a snow day today. So thanks so much for your time. We look forward to future updates.